All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk, the virtual trading floor. Before we get into any market-related discussions, here's a quick look at Derrick's positions as of a recording here today on May 18th, 2026. Again, Derrick is the head trader at T3 Trading Group. So, Derrick, happy Monday. How's your day going so far?
Not bad. Not bad at all. Monday morning, coming back from the weekend, obviously. Friday, we actually had a week close, which we're not used to seeing. And the question was, can there be some follow through for some deeper price correction today? The futures were down a ton last night, but to make things tricky, we opened up positive. Yet now the market has kind of resumed a little bit of that sell-off and is giving us a little bit of that deeper correction into the equilibrium zone that I like to look for at the index level. And I think that makes a lot of sense. And it could even get a little bit deeper from here. But then more broadly, I think it leads to a buying opportunity. And of course, the big event for the week is going to be NVIDIA on Wednesday, and that's going to have a big impact as well.
Of course, yeah, you mentioned it. Wednesday is the day of the week. The title of our stream today being NVIDIA earnings week, because that is what the market is focused on and waiting for. It's kind of the culmination of the end of earnings season, the big finale here at the end. So when it comes to, maybe we can look at the chart heading into the report and how you're feeling about NVIDIA yourself, pre-report this week. Of course, we still have today, tomorrow, and Wednesday's trading session before the report after the close. So lots of things could change. But just, especially in the background of the space and, other names that have reported that definitely impact NVIDIA as well, and how we've seen the market reaction to those. I see your charts. So, oh my gosh, I pressed the wrong button. So I'm going to pull those up now. All right, your charts are up. What do you think about NVIDIA pre-report on Wednesday?
Sure. So let's pull it up. The 5-minute chart here, just real quick, because it came up first. You can see we're a little bit weak. We're cracking lows. We're getting below 220 here again. Look, the NVIDIA run has been nothing short of incredible. I was long NVIDIA for the entirety of this move higher with a 220 profit target. I liquidated my position at 220. So I missed the last 2 days of this move here, but overall, really happy with how my trade went. And NVIDIA, it just went too far too fast, in my opinion. And you're seeing the semiconductors and the Qs give a little bit of a correction back towards its equilibrium area, which is what I was already referencing. You can see that here with this pullback in the Qs. It started on Friday. It's continuing today. And look, we've just come so far, so fast, that a little bit of digestion as broader positioning has gotten fuller again just makes a lot of sense here. So NVIDIA, I'm expecting, is going to have a great earnings report. Honestly, I don't see why it wouldn't have a great report. The question is, will it be good enough considering the move here? NVIDIA is a pretty low multiple tech company at this point. There was some comparisons that were going on between NVIDIA and the CBRS, which we just had IPO last week, a few trading sessions ago, just in terms of their fundamentals and just how incredibly more expensive CBRS is compared to NVIDIA. So again, I like the idea, generally speaking, of buying NVIDIA on any dips basically going forward. I think that they're going to continue to focus on returning to capital to shareholders in the form of buybacks. But what's going to happen specifically on Wednesday in and of itself, I have no idea. But we're in a semiconductor super cycle being brought on by AI, and we're getting through one of the best earnings seasons ever. I think that EPS growth, we're not done with earnings season yet, but EPS growth so far has been 25% or so for the S&P 500, which is well ahead of what expectations were. And you can see it in the charts. I mean, fundamentally, the market moved higher in semiconductors, the S&P, the NASDAQ. It is all appropriate. It was just we went a little bit too far too fast. We're getting a technical pullback here, and we'll see what happens on Wednesday. But for the moment, I love the idea of initiating new longs in NVIDIA below 220, and I've got that on my radar.
When it comes to the rest of this week, what are some of the other catalysts that you're focused on outside of Wednesday and outside of NVIDIA's report?
from a catalyst perspective, that's the main thing. Obviously, there's consistent ongoing stuff related to the United States and Iran, which is moving the price of oil here. And USO is basically making new post-war highs right now. I was just spending most of my weekend over in Wyoming, the Wyoming side of the border. I'm on the Idaho side, but gas is over $5 a gallon over there at this point. So that's going to be negatively impacting consumers' pockets. It's going to be causing interest rates to rise higher. But that doesn't matter for semiconductors, really. It doesn't matter for Mag 7 companies. What it matters for is the IWM. So the trade that I've been consistently calling for this entire month has been long QQQ while short IWM, and that trade has continued to pay. And it's because these are the companies, these IWM companies, that are going to be much more impacted by higher interest rates. You can see TLT got crushed on Friday, is staying weak today. Interest rates are moving higher. Inflation is way too hot right now, and this war is certainly not helping. But again, is that going to cause Meta to stop buying NVIDIA chips, NVIDIA GPUs? I don't think so. But if you're a mid-cap or a small-cap company and you have to raise debt to continue your ongoing operations, this is a big deal. So long Q, short IWM, I think continues to be the trade as long as things don't extend too far. And we're going to continue to watch these consistent developments, because the chatter, as you look at this USO chart making highs again here, is that a lot of the reserves from a lot of Asian and European countries are starting to run a little bit dry. And this could start to really accelerate here to the upside if we can't get the Strait of Hormuz open soon. So I'm watching that, and then I'm just watching these market technicals because, like I briefly mentioned, positioning has gotten very full now at this point. There's room for more adding to occur, but when we were at lows here in March, one of the reasons why I was making a bulk call back there was because we knew that if you could get any sort of a pause out of Iran and get a bounce off that, no one owned the market. Everyone was overly hedged. No one had any longs on, and buyers were going to be found higher. And that is exactly what happened. But at this point, after this incredible rally that we've had here for a month and a half now, positioning is significantly more full. So you're probably not going to see this degree of acceleration higher anymore. That isn't to say we can't go higher. As a matter of fact, I'm still pretty bullish, and I think that we do, but it'll be more of an ebb and flow. The hard part about this rally in April was that it was just straight up. Straight up is great for investors, for their 401ks. It's not always the best for traders, because for traders, we want ebbing and flowing. We want trends. We want pivot lows to come in. We want to be able to buy breakouts where we're not overly chasing price. And that made part of April pretty difficult. And I actually think that May is going to become a better trading month, because we can get pullbacks like we're having now that can create pivot lows. You can get shorter term positioning washouts that then can lead to the next highs, and you can execute those trades as well. So that's all the stuff I'm looking for from positioning through news-based catalysts.
Good stuff. Comment we got from YouTube. Hi, Derek. Awesome hold on NVIDIA. I love how you always plan your trade and trade your plan. And that is something that you, as a trader, really do focus on. And you're not, trading in dollars and trading your P&L. You go into every single trade with a plan and try to execute that plan, to what you set out ahead of the trade. How does that help you, keep you focused on the right thing? Maybe in a trade like NVIDIA that's definitely going your way, but you're not at your profit target yet, so you don't want to get out, but the P&L looks really good. So, how does having a plan help you, have the best trade versus just looking at the dollars?
Yeah, we can be so susceptible to that, to seeing green on the screen and be like, oh, this is great. I'm just going to liquidate the position, went up a lot in my favor. And then you end up leaving a lot on the table when the position continues to work for you. So the commenter here is giving me the opportunity to restate my favorite series of comments that I love to just talk about for traders in general. So let's get into it. The goal of being a trader is to be what we call consistently profitable. The only way that you can be consistently profitable as a trader is if you are consistent in your approach to the market. The only way that you can be consistent in your approach to the market is if you have rules that govern everything that you do with all of your trades. The game plan that you create for any trade that you get into is the manifestation of those rules. The game plan is like the definition of your edge, how you enter, how you exit, how you expect to book profit, how you expect to trail, where you're going to stop yourself out for a loss, all of that. And then the final thing is that you have to have the discipline to be able to consistently follow those game plans that you create for yourself over time, which in and of itself can be really tricky. But I try to tell myself, keep it simple, just follow the game plan no matter what. So if I got into a trade and my target was NVIDIA 220, then I am going to follow the game plan until I get to that point, because I know it's the only way that I can be consistent with my trading. And as soon as I deviate from the game plan, I basically am throwing the idea of consistency and therefore the idea of being a successful trader into the garbage can. And I also think that most of the time when traders think about like any psychological issues that they might be having with trading, for example, getting out of their winners too early or holding their losers too long, most of the time the answer to that can be found within your game plans and having the discipline to follow them. So I know that I am by no means not a perfect trader, but I know that if I can consistently follow these game plans, it's going to breed consistent results, and that's what I'm looking to do. So I would say that I am fairly hyper-disciplined with my game plans, probably to a fault, where I've been trading for long enough that I can tell sometimes when I'm in a trade that's not working out for whatever reason, and maybe I could get out of that trade right now and I could save myself some money instead of giving it back to my stop loss, because it looks to me like things have changed a little bit. But I would rather take the bigger loss. I would rather take a bigger loss on a trade that looks to me like it's failing because I continue to follow my game plan for the trade, than get out early and save myself some money. Because as soon as I get out early, even if in one circumstance it saves me some money, what I'm sacrificing is discipline and consistency, and then I can't be a consistent trader anymore. So I'd rather take the bigger loss when trades are going against me than just get out early because I think that something changed or my trade is failing or whatever. So yeah, really appreciate the commentary there from a friend in the comments.
Yeah, definitely. With your, you get into a trade, you have a profit target, etc. Are you trimming along the way, or do you really hold till your target?
So usually my game plan will include trimming along the way. Yeah. So I'm a very, very active trader. You might not see a lot of turnover in my positioning. A lot of the times you see day after day, I'm in a lot of the same names, but I'm extremely active within those names. So a lot of times I have a game plan on that's got a very, very wide target or whatever, like that NVIDIA trade, again, as an example. I was in that thing at $170 with a profit target of 220. I was looking for a $50 move on this thing, and I held for the entirety of the move. But also per my game plan, I was actively and rapidly buying and selling this on the way up, getting lighter. Like for example, into this 2-day move here on the 24th and the 27th, when it accelerated higher because my game plan said to book some profit, not get out entirely because it's not at 220 yet, but book some profit into this up move. But then I was rebuying into this down move, and then I was reselling what I rebought into this up move, and just working the position per the game plan that I established for myself to try to generate day-to-day cash flow on my trading while I wait for the bigger picture to play out.
All right, great stuff. When it comes to a week like this, where the main catalyst is on Wednesday, and there's really not a ton else coming. Like it's not a CPI week, it's not a jobs week. Really, the focus is Wednesday after the close, NVIDIA. How do you navigate a week like this? Heading into that, and then maybe after that, when the main catalyst is really in the middle of the week.
So most of the time, I don't really do too much in front of earnings reports. As a matter of fact, once you start getting to a couple of days in front of a report, I'm usually telling the traders and the team, like, hey, NVIDIA is going to be reporting on Wednesday. Today is Monday. it looks like there might be a trading opportunity for me here in NVIDIA, but I'm probably not going to take it because I'd rather just wait for the report to come out and let things settle down and see what that report looked like and see what the technicals look like after, and then trade after the fact. So I really prefer to trade the reaction to the earnings reports as opposed to just anticipating what's going to happen ahead of time. So,
but when it comes also just to the market as a whole, because NVIDIA specifically is like such an impactful name to the broader market. So does that make you approach a week like this differently than, say, a different kind of earnings report that wouldn't affect the broader market as much as it would?
I'll definitely be more cautious about getting into like an index level position. I'll definitely be more cautious on getting into like a TQQQ 3x leverage NASDAQ ETF, because I don't know off the top of my head what NVIDIA is of the NASDAQ. It's probably like 10% in and of itself. So it's going to have a huge impact on this. I'm not going to not trade it though. I'm not going to avoid trading SMH, which I think is 18% NVIDIA. I'm not going to avoid trading SOXX, which I think is 8% NVIDIA. I'm not going to avoid trading the Qs, but I will be a little bit more cautious, especially around sizing, because I don't want to have an adverse impact on this trade with just too much size, and then NVIDIA's report is terrible or something, and it gaps down huge, and I'm in the NASDAQ, a leveraged NASDAQ ETF, and then that thing's gapping down 5% on me. It's a headache I'd prefer not to deal with on too much size. If the size is small, I could probably manage the position properly. And again, now I'm going back to trading the reaction, honestly, after the event. And if the size is small and the position's against me, it's not going to be a big deal. But if I'm too heavy and then the NASDAQ rips against me, I'm going to have an issue.
A question we got from Brant on YouTube. Do you think institutional money is going to rotate out of semis and into software or other sectors from here on, or are any semi dips a buy?
I think any dips in semis are a buy. To answer the second question first, I think that bigger dips in semiconductors are buys. I don't think that this AI super cycle is going anywhere. We just saw these Mag 7 companies report earnings, and none of them are slowing down on CapEx, at least not at this point. If we begin to see any inkling of a slowdown on CapEx, I need to reassess that thesis. But until and unless I see that, I think that bigger picture dips in semiconductors are buys. The question on whether we get some sort of a rotation into software is a little bit trickier. Semiconductors, and this is just one of these weird things about the new modern market, semiconductors and software right now are trading completely opposite of one another. We're having 2 weekdays in a row in semiconductors, and we're having 2-3 stronger days in a row here in software, which is kind of breaking out a little bit on this IGV. I think that broadly speaking, as the NASDAQ moves higher, that it'll kind of raise all boats, if you will, that the tide's going to move in and software can move higher as semis move higher, broadly speaking. But the question is really going to be where the relative strength and relative weakness is. And I think that you're going to get more bang for your buck overall in semiconductors than you will in software. But that doesn't mean that they can't move higher together. And that doesn't mean that you're not going to have individual trading sessions like we're having right now, where these semiconductors just got a little bit ahead of themselves. And maybe there's some profit taking ongoing in front of NVIDIA's report, where you get some days of strong relative strength out of software than with semis. So I personally like the idea of having both on my book. And I do, right? I'm long some SMH right now, as we're talking about. I'm interested in buying some the NVIDIA dip. I've got a little bit of Intel and Qualcomm long right now, but I also have Microsoft long. I also have a couple cybersecurity names long. I'm long S, which, by the way, anywhere within software, cybersecurity continues to be kind of my favorite area. So I'm long S, I'm long NTSK, I'm long ESTC. These are software plays, and of course Microsoft. They're going to be moving more with the IGV. So I like the idea of having both on the books as those setups come in. And there's some other great ones that I'm out there that I'm not in, that some of the guys on my team are in, that Pat's been involved in this ServiceNow, which is now given a great 3-day move here. I think that the snow chart looks pretty decent. We called for a long on that on Friday. It's breaking up further today. So I like the idea of having both. I think the big picture that the semis are going to continue to pay you better, but there's going to be rotation, and that rotation is going to lead to opportunities on both sides.
Like I mentioned at the beginning, NVIDIA is kind of like the finale here of earnings season. We've already heard from all of their counterparts in the space and all the other semis, except for Micron. Micron comes actually later than NVIDIA, but they're more storage and memory. But those two sides, of course, have been playing together. What are some of the sympathy moves that you would be looking at off of an NVIDIA report this week?
So the thing about NVIDIA, just to throw it out there, obviously it's the biggest company in the history of the world. And we were seeing not too long ago, like parties and bars in New York City for like NVIDIA earnings reports parties and stuff like that. But actually, NVIDIA's reports have become relatively boring the last few quarters because I just think that the company is so well followed and everyone else has already reported earnings, and the market has done a good job just kind of fishing out what the other earnings reports are going to mean to NVIDIA, that the NVIDIA report in and of itself has actually been relatively boring for a bunch of quarters in a row now, just because I think it's kind of priced perfectly for the most part. So I'm not actually expecting that NVIDIA is going to be super, super exciting. I could be completely wrong on that, but it's going to move every single semiconductor stock. It's going to move the memory stock. It's going to move every single semiconductor stock. I don't think it has as big of an influence on the other Mag 7 names. I think the other Mag 7 names have a bigger influence on NVIDIA than NVIDIA has on them. But the biggest thing will be the secondary effect just on the NASDAQ itself because of the weighting. And all the other semiconductors are going to move with it. AMD is going to move with it. Intel is going to move with it. Marvell is going to move with it. AVGO is going to move because of it. All of them are going to move with it. So that's going to be the broader impact to pay attention to.
All right, Derek is a real trader, so I want to let him get back to that. But any final thoughts here on the market on Monday pre-NVIDIA?
No, so I am bullish, but we are having a little bit of a correction here. Positioning is getting fuller. There is the potential, if something were to go wrong this week, I think just with where the market has gone to and where positioning is, that you could get a very fast, deep correction. But I think that if that were to happen, and I've been describing that as like a 25% probability that at some point this week we get a very fast and deep correction. I think that if you were to get that, you need to have the firepower available to buy that dip if it happens. And if it doesn't happen, then the setup will present itself and it won't be as good of a risk reward opportunity, but I still think it's an opportunity to get long. So I am starting to build in very small into some things that I like. I didn't really start on Friday. I kind of waited for today for the correction to get a little bit deeper. And I still think I'm actually being somewhat aggressive. So I kind of like the idea of nibbling into some stuff that you like in the smaller correction that we're already having, but keeping in mind where we've gotten to from a positioning perspective we just got past OPEX and what that means from a market dynamics perspective, that you could see a very hard, very fast sell-off at some point early this week. And if that were to happen, you need to also have the firepower and bullets available to be able to buy that with both hands when the timing presents itself. So little nibbles here, better risk reward if we can get a fast, hard sell-off, maybe 25% chance that happens. Be prepared for it if it does, because it'll create a great opportunity.
All right. I'm going to let, we're still on your charts. Let me pull my screen back up. There we go. All right. If anyone is interested in working with Derek and T3 Trading Group, again, I said at the beginning, you are the head trader at T3 Trading Group. So all traders who work with the firm and do work with Derek on a daily basis. You go to t3live.com/DO live. Derek, next week is a holiday, so enjoy the short week, and we'll catch up again after Memorial Day, the week after. So we'll be on a break here for a week. But enjoy the long weekend after NVIDIA. I hope you have a great trading week, and we'll talk again soon.
Thanks, Greta. Talk to you soon.